Hi, I'm Jaqueline P'ng and this is Making the Call. Pay TV giant Astro Malaysia Holdings announced its earnings earlier this week. Net profit was flat at about 137 million ringgit for the second quarter of FY16. That's basically just marginally lower year-on-year, about 0.4%, mainly because of higher finance costs and unrealized forex impact. MIDF Research sent out a note on the company today, and it says after adjusting for the forex losses, Astro's second quarter normalized earnings were actually up by some 6% year-on-year. This took EBITDA margin up to 42%, and EBITDA is usually the fairest reflection of the company's growth. MIDF also notes that the group has continued to outperform despite the various headwinds affecting the media industry. Astro's also got a progressive dividend policy. And at the current share price weakness, MIDF says the counter now offers an attractive dividend yield of about 4%. It's upgraded its call on Astro to buy with a higher target price of 3 ringgit 58 cent. Over at Kenanga Research, it says Astro's first half PATAMI of 306 million ringgit came in below its expectation. It notes that despite the challenging operating environment, plus the softer consumer sentiment, the company is still hopeful of achieving, among others, mid to high single-digit revenue growth. Still, Kenanga's lowering its FY16 and 17 core NPs after cutting its ARPU target for the company. It's maintaining an outperform call on the stock with a lower target price of 3 ringgit 30 cent. On to SapuraKencana Petroleum. At last look, its shares were up about 7.5% in line with the strong start for the FBM KLCI. This despite its net profit sinking 77% in its second quarter ended July 31st, mainly on its oil and gas asset impairment provision. JF Apex Securities says this kitchen sinking comes after an expected V-shaped recovery in oil prices did not materialize. And since the latest provision was made on oil price assumption of $55 a barrel, it warns that further impairment is possible as it's unlikely that crude will recover in the near future. Still, it notes that the company's got good earnings visibility and steady gearing, but it believes SapuraKencana could face challenges in replenishing its order book. JF Apex retained its buy call on the stock with a lower target price of 2 ringgit 75 cent. Meanwhile, AM Research is looking at SapuraKencana's drilling segment. The company's posted higher margin of 27% for this particular segment, but AM Research says it could see pressure there as 4 of its rigs are currently stacked. The company expects of the stacked rigs to be awarded a deal by the end of this year, with another 3 contracts next year. Plus, 5 of its existing contracts will be expiring over the next 2 years. The research house is maintaining its buy rating on the counter, but it's cut its target price to 2 ringgit 45 as it anticipates lower earnings in FY16 and 17, thanks to the lower utilization of the tender rigs and a weaker energy segment. And that's it for Making the Call. I'm Jaqueline P'ng. Thank you for watching.